Hi everyone. I am your economics teacher Anjali. In this video, we're exploring how different activities related to houses and construction are counted in our national income. We'll see which housing-related activities are included and which ones aren't. Let's get started. First concept to note is that everything discussed here is with respect to expenditure method of calculating national income. This is because we are discussing about spending money. Please pay attention. We are talking about spending money. Spending money like buying or constructing residential or commercial building. When a new house is constructed by a person who is part of households, then the house value is part of gross domestic capital formation and is included in national income. This is because it's newly produced, adding value to the country's economy. The total amount spent on construction items like cement, steel, bricks, wood, stones, labor cost, etc. will be included. Next we discuss case where someone buys a newly built house from a builder. This is also included in national income under gross domestic capital formation. The reason is that this sale represents the final value of a new product produced in the economy. Under expenditure method, only the final value of goods and services are considered, and so, this final value is recorded when the house is completed and sold to the buyer. Now, let's talk about second-hand houses. If someone buys a house that's already been lived in or an old house, it's not included in national income. Why? Because the house was already counted in national income when it was first built. Selling it again doesn't add any new value to the economy. It is just the transfer of ownership on an asset, so it's excluded. What if the second-hand house is sold through a broker or a real estate agent? In that case, the brokerage paid will be part of national income. It is because the brokerage services are newly generated this year in the economy. Similarly, any legal fees paid to advocates or notaries in this connection is also included. Now we come to construction of commercial buildings. Commercial buildings are like factory buildings, office building, shopping malls, shops, etc. When such buildings are constructed, then these are part of gross domestic capital formation as some new thing is produced in the country. As in case of residential houses, buying a second-hand commercial buildings are also excluded from national income. Any brokerage or legal fees paid for buying the second-hand commercial building will however be included. Construction of buildings by government like offices, schools, hospitals, parks, museums, etc. are part of gross domestic capital formation by the government and included in national income. This is again due to the fact that something new is produced in the country. Building of airports, seaports, etc. either by government or private sector is part of gross domestic capital formation as it represents new productive assets. What about amount spent on repairs to existing houses? Repairs and maintenance costs gets included in national income under the head private final consumption expenditure. Please note that repairs are considered consumption expenditure, not new production. This is because households spend money on maintaining their existing homes, and this spending contributes to the economy. While repairs don't create new buildings, they do keep homes in good condition, which is a form of consumption. Repairs of commercial buildings are not part of national income. These are part of intermediate consumption by the producers. It is to be noted that in case of expenditure method, only the value of final goods and services is considered. Repairs by government of office buildings, schools, hospitals, etc. is part of government final consumption expenditure and is part of national income. What if a major addition is done to the house like construction of a new floor, etc.? In this case, it is part of gross domestic capital formation and hence included in national income as something new is getting produced. Significant renovations or upgrades that extend a building's useful life or substantially increase its value are classified as investment expenditure. Here's an interesting concept: imputed rent. Imputed means assumed, so imputed rent means an assumed rent. If someone lives in their own house, then they will not pay any rent. But the government still estimates a rent value for it and includes it in national income as part of private final consumption expenditure. This is because the homeowner is receiving a housing service, just like if they were living in a rented house. Since no rent is actually paid, so some assumed rental value to be taken based on market rates. Remember, imputed rent only applies if people are using a house as a residence. If a house or property is left vacant, we don't count imputed rent. Imputed rent is meant to capture the value of housing services consumed by homeowners occupying their own property. If the property is unoccupied and not providing housing services to the owner or a tenant, there is no imputed rent. Imputed rent also doesn't apply to commercial buildings or offices, as these are part of capital assets used in business and in a way part of intermediate consumption. What happens if a resident builds or buys a new house in another country? This doesn't count in our national income because it's outside our country's borders. National income only includes production of assets within our domestic territory. It only includes gross domestic capital formation, which implies the capital formation within the domestic territories of the country. Example: if an Indian resident builds a house in USA, it is not part of India's national income. Since the property itself is not part of our gross domestic capital formation, so no imputed rent considered if a resident occupies own house in foreign country. Imputed rent does not apply to foreign properties, as it is only calculated for owner-occupied residences within the national borders. Finally, let's talk about interest on housing loans. The interest paid on a housing loan isn't included in national income. It's considered a financial transaction and not goes directly into constructing the house, so not part of spending on goods and services. Here loan is taken for consumption purpose and not for production. The value addition on house property has already stopped when construction of house was complete. More on this concept will be discussed in a separate video on various types of interest payments. Purchase of land is not included in gross domestic capital formation, as it is free gift of nature and cannot be produced. So not part of national income. Depreciation on capital assets charged by firms is not included in national income as it is just a book entry for reducing value of goods which were produced earlier. These were already included in national income when produced. Loss due to destruction of building due to an earthquake is not included in national income. Such building was already included in national income when originally constructed. Now there is no new production due to this loss or expenditure. So, to sum it up, I have tried to cover many different scenarios for inclusion and exclusion from national income. If you have any other doubts in this respect, please put them down in comments and I will answer them. More scenarios will get covered in future videos. Thanks for watching.